This video will look at the report section, something similar to the author case. So basically, principal multiplied by 1 plus the growth in percentage, power of current period minus 1. Now, if you can recall, we sold the asset at year 5. Thus, we need another if conditional inside the formula so that after year 5, we do not have growth because we already sold off the asset. So there's no more income from that asset. We have to add an if conditional, which we have the if conditional as if current period, as long as it's less than the year asset is sold, we will have the receipts from the growth. After the asset is sold, we have 0. That means there's no more revenue from the equipment. This formula can be used for your receipts and also your disbursement. All right, we are using the same formula for both of these cells. Let me change the color back and let's fill this in. So if current period is C27, as long as it's less than year asset is sold, which is C6. I'm going to lock this because I don't want C6 to change, whereas my current period I want to change because I want to refer to year 1, year 2, and so on. Now, the principal growth is B11. I want to lock it because I don't want to change. Multiply by 1 plus the growth. 1 plus the growth. Growth is 5%. Power of current period. Current period is C27 minus 1. Now, this is the condition when it is true. So as long as the asset remains in our hands, we'll keep making that revenue. But once it is sold, when the condition is false, we make 0. Now, we do the same thing for disbursement. Current period again, as long as it's less than year asset is sold, I lock it again. Then we have to spend money to run the machine, to run the equipment. B14 times 1 plus the growth rate, which is 4%. Power of current period minus 1. And after the asset is sold, we don't have to spend any more money to maintain or run the machine. All right. So these two figures can be dragged across up to year 10. Let's drag it across. Right. And you can check after year 5, the asset, we don't make any more revenue and we don't make any more. We don't have to spend any more costs. All right, I'll just delete this. So cash flow from trading before tax is just basically your cash receipts minus the expenses. Then drag across. Less tax on trading is just basically the tax rate, which is 30% paid to the government. We lock this because we always want to maintain a B8 and multiply by the whatever net cash flows into the company, which is C32. And we drag across. And we calculate the net cash flows from trading is just basically the cash inflows less the tax. Same thing, right? So the tax savings from depreciation. All right, to calculate the tax savings from depreciation, it's just basically the tax rate again, B8, and we log this because I don't want it to change. Multiply by the depreciation expense, which is this. So we can claim depreciation. Now I want C20 to change because in year 1, the depreciation is C20. In year 2, the depreciation is D20. In year 3, the depreciation is E20, and so on. At the moment, because we are using straight line, the answer remains the same. But in the future, we may change our depreciation method. We may use reducing balance. All right. So because of that reason, we want our model to be flexible enough to capture the variation in inputs. So we'll have 620, C20 we want to change. So press enter. Again, we copy across. Is where if you make a loss, you can claim deductions, thus have tax savings from the tax department. Now, you can only claim a tax savings if you make a loss. All right. So you need to have I'll put a principle here, put the formula, the key ideas of the formula. So if loss on disposal, then tax rate multiplied by the loss. Right? If a loss on disposal, tax rate multiplied by the loss. Otherwise, it is 0. I don't make any. I don't have to pay any taxes if it is if I don't make a profit or I don't make a loss. Now I'm going to purposely make an error here, and then I will explain why this error happened. All right, this error happens because of the structure of our model. Right, the structure of our model. Okay, I'll do this first, and then I'll illustrate how do you correct this error. Right, so if there's a loss here, if C22 is less than 0, I'm making a loss. I'm making a loss, then I have to pay a tax. B8 times the loss, which is at C22. If I don't make a loss, or neither do I make a profit or anything, I just pay 0 to the tax department. All right, I can't, if I make a loss, I can claim from the tax department. If I make a profit, I have to pay more in taxes. Right? So we'll just press enter here, and we'll drag across. Now, you'll notice there's an error here, a minor error here. Now, we have this, we are expecting in our model a positive figure because we are adding all this, like add tax savings from depreciation, add tax savings from loss on disposal, add the selling price that we get from selling the equipment. So we are expecting all here to have a positive figure. All right. To convert this to positive figure, we just put a negative sign here. And then drag across, and it should have a positive figure. Right? We have a negative just now because we have made a loss. Right? We make a loss. So when we refer to the cell reference here, this is a negative figure. Now we'll go on to the salvage of equipment. We only sell our asset at year 5. So if current period is equal to year asset sold, we get our selling price, which is the salvage value. Any other year, we do not sell our asset, so we should receive $0. right? So this is the key, right? So let's do this as a cell reference in the formula. So if current period is C27 here. If it's same as the year asset is sold, year asset is sold is at C6. Move this a bit. If our current period is a year asset is sold, then we receive this amount. We expect to receive the salvage value. At any other point, it's 0. So we'll just drag across here. All right. So we check year 5, we receive 10,000, and we have tax savings of 28,500 because we make a loss. Now, we are going to look at the tax on profit on disposal. All right. Again, this is the mirror image from tax savings from loss on disposal. So if there is a profit, so if there's a profit, let's say C22 is more than 0, that means we are making a profit. We have to pay more in taxes. Paying taxes. E8 times the amount that profit we make. P8 30% times the amount of profit we make. If we don't make a profit, we don't pay any more in taxes. So 0. And we drag across. For initial investment, we only make the outlay at year 0, at the start of the year. So we put if current period is at year 0, and we have to buy the equipment for 200,000. Any other point is 0. Cross. Now, total net cash flow, sum B35 to B39, less sum B41 to B42, right? Sum B35, B39, this one because of the addition of all this, and minus this. Now, we are going to look at the net present value. Net present value is just basically the rate. The rate here is 8%, B9. You don't have to lock or worry about that because we are not going to copy across. It's just a single cell item, single cell formula. Now, value 1, value 2, value 3. You have to be careful. You cannot include the year 0 because year 0, you don't discount it. So you have to include it outside the NPV formula. All right, this is just the way Excel handles net present value. So you select C44 and then you C44 to L44. You go in the middle of the cell and then drag until L44. Post the formula, add this B44. You notice that B44 is already a negative, so I don't put a negative sign. All right, I need to put a negative sign if this B44 is a positive figure. All right, I put a negative sign because it is a cash outflow. I pay off my investment, so that's why it needs to be a negative. But in this case, it's already a negative, so I add it. Press enter. I'm going to change the decrease the decimal. It's just too big for me. All right, I'll just ignore the decimal. IRR is similar. All right, IRR, internal rate of return. It's just basically B44 until L44. Don't worry about the guess. Guess is just sometimes in certain situation you can multiple answers, and you will have to tell Excel which are the closest answer to that. But in our case, we can just ignore it. Okay, IRR, I think I'll put some decimal. So it's about 11%. Decision, how do you make a decision? The decision is this. We usually use NPV as our as the way we make decisions, because NPV is the most theoretically favorable. If NPV is more than 0, we invest. Otherwise, we don't invest. We don't look at IRR because sometimes it can be multiple IRR and we don't know which one is correct. So the theoretical best solution is actually the NPV. All right, let's do this. NPV, if NPV, which is B46, is more than 0, we invest. Otherwise, we don't invest. Right, I'll just move this so that the formulas, we can see the formulas easier. Right, this is the end of Peterson. Go through this video again. Try the question. You can easily pause this video and go back again. You may need to go through this video a few times because Peterson is quite long, and you might need to go through it a few times to get a feel of how to do this question.